Good morning, everybody. Happy Friday. It is the last weekday before the Super Bowl. That's exciting, right? Welcome to the morning show here on Stock Market TV. A lot going on this morning. Brett Conrad will be our guest, Longboard Capital. He'll be on at 9. We'll have Alfonso, the chart master, on at 9:30. It is Crypto Friday, so I'll have some crypto charts. Unfortunately for us, no Louis this morning. Louis he's on a little trip, but he'll be back next week. So we will have to power through Crypto Fridays without Louis. What else do we have here? Oh my gosh, these Bitcoin mining stocks. Have you seen those? Gosh, they move so damn fast. If you blink and you miss it, it's crazy. We got some earnings, market breadth. We're going to keep on this market breadth discussion because it's a discussion of the week, frankly, here on Stock Market TV. So, good morning, chat. Good morning, Brandon, Jonathan, Chris, T-Man, Sambo, Hot Pepper. Good morning to all of you. Hit that like button, please. And here we go.
All right. Happy Friday, Mr. Spencer.
Oh, happy Friday.
Happy Friday to you, Mr. Strazza, wearing the bull market shirt.
How you doing?
Strazza says, when the cryptos are mooning while I'm sleeping, I dress appropriately.
I didn't get a great sleep last night because of the cryptos, I guess. No, I don't know.
Dude, Bitcoin up 2,000 points in the overnight session. Woo-wee! Making moves. Can they take out these key levels?
Just the last 3 candles, some nice momentum here.
Are they going to be able to take out the 47? That's the big question. That's my level. Been our level. The market's respected that level, sort of reiterating that we're like, we're on the same page. It's nice when the market reiterate, because sometimes you're like, oh yeah, this is resistance, and the market just rips right through that like it's not resistance, right? But when the market reiterates that yes, in fact, a certain level is resistance, that further validates the level. And I think Bitcoin did that with 47, didn't it?
Yeah, I think it probably breaks through this time around. I really like that this move started with a little shake back in January. So,
And do you think how much trouble do you think we're going to have at the 65 level, 66, like in that range? You think it's going to be tough pickings up there, or do they rip right through?
It's hard to say, right? Because it just built up some fuel with 2 months of sideways here.
Agreed.
But you would think like there's some serious dead bodies. You talk about 47 as a level, 60, 65. That's a big level. I would think, something up there, right?
Something up there. But like, remember from the beginning, I've been in the camp that, we probably acknowledge it, but we're probably going to rip right through that. I think, and I still feel that way. We go straight to 100, 110. No?
I think eventually we rip through. I don't know what it looks like, how much time it takes. I think it's probably a healthy thing that we just spent 2 months sideways here.
Are you fading cryptos at that level, if and when we get there?
That's a great question, and
I know it's a fantastic question. I think, right. And I don't have the answer, because we're not there yet. So I'm like, I'll worry about it when the time comes.
I built the vast majority of my crypto positions on the reversal pattern breakouts, right? And once you get back to those old all-time highs, that should be, at least target 2 in most cases, right? You probably have an extension or something along the way, and then you have those old highs. I think that if you look back at any past crypto cycle, we don't just get back to the old all-time highs. We blast through them and then like 5-10x through them, right? So I think maybe you feed the ducks a little bit there, but if history is going to repeat itself, as we've seen in past cycles, I think you do eventually get much higher prices than.
Remember the trade. The trade was mortgage the house, flip the book long on a breakout above 31. Remember, JC's so funny, but like serious, right? Like, yes, that was funny, I guess, to some people, but I couldn't have been more serious. 47 was the initial target, but to your point, it wasn't the target. It was just a target, but certainly the initial target. And by the way, the market reiterated that that was valid.
Yeah.
That in the future could be support. 47.
Yeah.
You
I
know?
don't think we see it again, but yeah.
Wow. You don't think we see 47 again? That's the top.
I don't think we see S&P 4,000 again either. I got news for you.
Ever.
Dude, 20% away right now. Who knows where we get?
Market just rallied 20% in 3 months. I don't know if you.
Of course, but I'm thinking about cycles here. Who knows where we end this cycle, right? What is the final cycle peak? What price is that at? I don't know. But then if you were to measure the next bear market from there, say 20%, you're not going to get to 4. You know what I'm saying?
I know what you are implying. I don't know for certain that that's how it will play out. We're never going to see 4,000 ever again. Like, I don't know, man. That's a little aggressive.
As you know, a bear market is 20%. 20% drop, right?
I don't agree with that. I don't know who made that up. That's bullshit.
The point is that standard 20% drawdown.
No, but that's not, but standard, that's for morons. If you go back, hold on. If you go back and you study every bear market in history, that 20% level is irrelevant, every single one.
Of course. And a lot of the things we do and a lot of the conversations that we have, unfortunately, are also irrelevant, right? So I can surmise or guess how this might play out or what the exact drawdown is of the next bear market.
If you think, not you specifically, but if a person out there thinks that a 20% drawdown from a high means that that's what a bear market is, then I don't want you here. Go away. Fine. Go somewhere else. Go to whatever the CNBC or the Fox or whatever, the Bloomberg, or you're not welcome here. That's not how we think around here.
I hear you.
Tell him, Spencer. This isn't Benzinga.
I was going to say, Steve, you know as well as I do, a bear market is when JC decides it is.
Oh.
Hey, listen. I appreciate you giving me that shout out on my tremendous track record, but it's little to do with me and more to do with when stocks stop going up and they start to go down and they keep going down and more of them are going down, and that happens over a prolonged period of time. That's what a bear market is, you see.
Just to answer your question that you asked about when will S&P 4,000 be seen.
I wasn't asking you.
You asked the Twitterverse. I'm a part of that. I'm a part of that.
And I asked Twitter in a very obnoxious way.
Yeah, because you didn't give the option that I wanted.
Right. Well, it wasn't for you.
Mm-hmm. Yeah. No, but you need some sort of yardstick, right? To say, okay, where does the next bear market bring us? I'm just using 20%.
I was talking to Phil Perlman, and he's talking about we're talking about the Chris Dixon book that I like, and we're talking about Morgan Housel, and he's like, I love Morgan, but I have already heard all those stories before, and I knew a lot of that stuff. I'm like, Perlman, the book wasn't written for you, buddy.
I know.
You're the last person this book is for. He's like, that's true.
I don't disagree with him.
Yeah, but the book's not written for you either.
No, it's a great book, but
it is a great book. It's not for you.
If you've read his blog,
It's like for your little cousin or your, our new intern or whatever. You know what I mean? Like, it's not for you. All right, hit it, Spencer, please.
What am I hitting? State of the market.
Crypto Friday.
State of the markets first, and then we'll do Crypto Friday.
All right.
All right. Let's check in on the markets. Dow futures up a monstrous 125 points after a new all-time high yesterday. S&P futures up 18 handles, about 35 basis points. NASDAQ futures leading the way this morning, up almost 40 basis points. Bond futures up also as stocks and bonds continue to move together. That 30-year futures up 40 basis points. That's a big move for bonds this morning. Silver flat, copper down again, down 50 basis points. Gold flat, crude oil flat after a monster move yesterday. And the dollar slightly down this morning, pretty much flat and mixed. 10-year yield, pretty much flat, down a little bit, down towards 4.14%. On 10s, the VIX up this morning, close to 13. And boy, is Crypto Fridays, what an understatement that is. Bitcoin up over 2,000 points 47,500 for Bitcoin. What a move. Let's see if they can stick it today. Ethereum also up 4% on the day, up above 2,500. Old Solana hanging out there above 100, sitting right around 105. And Spencer, total crypto market cap attempting to make a new 52-week high, trying to make a new 52-week high today, hovering right around 1.75 trillion. Wow, very impressive.
Yeah, I mean, I come in this morning and I see like the lower end of the crypto miners up, 10-20%, right? Clean Spark, Cipher Mining, Hut 8, right? And I'm thinking, oh my god, it's gonna be one of those days.
Strazza,
And
Strazza.
Spencer, give me some volume so I can hear what the fuck you're saying.
Yeah, Spencer,
And
when you're talking, you have to put your mouth in front of the microphone.
Why is my all right? Do I just not talk loud enough? I will talk
You
louder. How's that?
definitely don't talk
All
as
right.
loud as I do. Few people do,
All
so
right.
that's not your fault.
I would talk louder.
People want to hear Spencer Israel. Like you have such a soft voice, like a welcoming,
my point
voice.
crypto miners, they move so fast every time it catches me off guard. That's kind of my point.
I love the fact that you just started rattling out all these the shitcoin irrelevance of the Bitcoin miners. Like that was very. You saw that, Strazza? That was very good.
Yeah.
Very
like
good.
that. I like that.
I love how I'm getting trolled on the
Yeah,
chat for being short stocks. First of all, our shorts are working. You might not see those shorts working. I guess you haven't looked, but our shorts are working. The indexes, our S&P and NASDAQ shorts aren't necessarily working very well, but they're not working. These indexes aren't going higher. And our actual short positions are working. So no, we're not covering anything yet. We'll cover them when our targets are hit.
I didn't ask that. So
I know you know.
No, the chat did. Someone in the chat, yeah.
So Spencer,
not always about you, Strazza.
Spencer mentioned crypto miners.
Can we wait Can we wait, please, and just do the state of the markets, and then we'll do the Bitcoin?
Sure, fine.
Right, because you're Louis today.
I brought charts today. Oh, we have no Louis. We lost.
We have no Louis. You are the Louis today.
Oh my God, it's gonna be so good. What a treat for everybody. All right. Wow.
Wow.
I better go get ready.
Wow. Wow.
All right.
Poor Louis.
I love Louis.
All right. This is a good one. This is a good chart. This is a good chart. Here, slide 2. Strazza. I'm gonna give myself credit. I don't always give myself credit, but this is a great chart. Like you can even see how I highlighted where the dollar peaked, where the New York Stock Exchange advanced decline line peaked, copper putting in a lower high, making new multi-month lows. Credit where credit's due. JC gets the great chart. Great chart.
Annotated like a pro, for sure.
Yeah.
If I had to take issue with it,
please.
Short-termism, the relationship is there and you're showing it, right? But I can only see back to Q3 of last year.
Yeah.
If I zoom out, is it really that big of a concern if copper's maybe not trending well for stocks?
First of all, I don't think there's anything to be quote unquote concerned about anything.
No, right? In terms of divergences, like how strong is this relationship when you zoom out?
It's less about how strong this particular relationship is, and more so how many things are doing the same thing as this thing and started to do that thing at the exact same time. It's more of that. Like it's more like I understand, the copper regional bank stuff. Like we've talked about that. The relationship interest rates have shifted.
Yeah.
Talked about this. We're moving on. What we're particularly focused on, or at least what I'm focused on, is seeing that a lot of things change here at the end of December, particularly on the 27th, when the dollar bottomed. The New York Stock Exchange advanced decline line peaked on the same day. So did copper. So did the Russell 2000. So did a ton of other things if you go and actually count.
Listen,
now copper's making new lows. So it's not one of the best things you said this week. It may be the smartest thing you've ever said, which is not a high bar, but in this case it was good. You said that while sure the breadth deterioration is quite obvious, it's just math. Fewer highs, of course, to the point where there's just no highs, like at all, zero. But we haven't gotten the expansion in new lows.
No.
Very, very wise point, Steve Strazza. However, when you look at the intermarket situation, I would include copper breaking down to new lows as one of those expansion and new lows. So maybe the first, maybe the only. I don't know. I'm going to go with the first.
You're not going to get much pushback on this from me. I'm on board with this one. Copper, go back throughout market history, one of the most traditional risk-on assets, right? Dr. Copper. So we've used it this way for a long time. I don't know particularly how bearish these new multi-month lows are, but I do know it's definitely not bullish or supportive.
Again, Strazza with the wisdom. Absolutely right. Absolutely right. It's definitely not bullish. How bearish is it is the question. Couldn't have said it better myself. Look at Strazza with his bull market shirt on, dropping knowledge bombs on y'all. You pay attention, Spencer?
I'm plugged in. I'm plugged in right now. I'm plugged in. Can we talk about new lows? I think we should monitor breath each day while we're going through this situation.
Yeah, I mean, we could talk about. There's nothing to talk about.
No, there
new
is.
lows continue to fall across the board. I got 6 charts.
It's not about the new lows falling. It's about the lack of expansion. Like there are no new lows. Like falling, they're just not going up. So there's nothing to talk about.
They're actually like contracting though.
Yeah,
we're getting fewer and fewer new lows. Is my point.
Yeah, great, but fine. But we're not getting more. More importantly, yes, like fine, maybe.
Point, we're not getting enough new highs for you either.
Well, it's not that we're not getting enough new highs. We're not getting any new highs.
Well, we got a shit.
Somehow, I didn't think it was possible. Somehow, yesterday in the New York Stock Exchange, there were actually fewer new highs than the day before. Like I didn't even think it was possible. Somehow they found the way. Go to the next chart, Spencer.
There were 100-something new highs yesterday.
Wait, I
want to see
2,000 stocks. I want to see these Steve charts. Hold on.
So here we go. So the bond market is the big bully around here, right? This is the bond market's the Charles Oakley, the Draymond Green of the market here, the Dennis Rodman. What's the guy for the Pistons back in the day? Bill Lambier. Is this the Bill Lambier of the market? And bullying things around?
And Dennis Rodman. Yeah.
Let me ask you something, Mr. Strazza.
Hey.
Do you think, in your infinite wisdom, do you think that it is just a coincidence that the day that the bond market peaked is the same day that the U.S. dollar bottomed and the same day that small caps on the Russell 2000 peaked and the same day that the New York Stock Exchange advanced decline line peaked? Do you think, in your infinite wisdom, that that's just a coincidence?
No. So that
Ben Wallace, great call with Ben Wallace. Yeah. Ben Wallace was he that tough though?
He was pretty tough because he was like 6'8". He was one of those like solid rebounders.
No, but he was a beast. I feel like there were smaller guys that were more beast mode.
No, he was like Rodman's height. I think that's a good one. He was
fine in size, but I feel like he was under tough for his size and ability.
I used to play NBA Street, and Ben Wallace was my go-to because he would just bully everybody in the video game.
He was the man. The hair.
Yeah.
You know, it's like Questlove on the drums.
If you see him now, he looks like a college professor. He's got a very refined look.
I would have guessed he looked like Don King by now.
No.
Right. I almost Strazza on this.
He went the other way.
Hold on. Can we get back to the task at hand? Can we get back to the we get thrown off with 90s basketball? Can we
Oh, did I tell you? I'm thinking about going to Hurricanes Tar Heels tomorrow. Why not? Right?
Okay.
No reason why not.
Okay.
You should go. Now, the bond market.
Because you didn't answer my text, so I had to bring it up here.
Is it a question? Is it a coincidence?
No, it makes sense, right? The correlation is alive and well. But however, rates are at, these pivot highs, and also there's some former resistance going back to I think 21 or 22 that we're running into right now in 10s and 30s. Yeah, from late 22. 4.4 in 30s. 4.4 30s, big level. Big level.
Do you think it's a coincidence that copper and the bond market peaked the same day?
No, JC.
And if the bond market is doing what the copper market is doing right now this week, do you think that that is a bullish thing for the stock market?
Here's what I think when I see this chart. I think automatic reaction off the late October low, right? These certainly look like continuation patterns within the context of that underlying trend, right? That Q4 rally.
Yep.
And we've been sideways here for 2 months almost.
Yeah.
Right. So at what point do these continuation patterns continue? That's what I'm really seeing from all of this. And then if these continuation patterns continue, are stocks going down?
Well, by definition of the New York Stock Exchange advanced decline line is breaking out to new all-time highs and continuing higher.
But
Mathematically, that would indicate that they are going up.
I think this is so important because we did this study on here before. I know that you heard me, unless it went in one ear, out the other. When I say
I'm sure I heard you.
up,
Whether I listened or not is different.
I mean S&P 500. The S&P 500 going up and most stocks in the market going up are not the same thing. But we need to pick one way to measure when we say stocks are going up. When I say stocks are going up, I mean the S&P 500 is up.
Yeah. How come no stocks on the New York Stock Exchange can go up?
Dude, we had 130 new highs on the New York Stock Exchange yesterday.
130.
Like
that's almost like 10%. Wow.
Listen,
is that more? Hold on, Strazza. Is that more
this,
new highs? Is that more new highs, or is that fewer than what we've been seeing over the last couple of months?
Slightly fewer.
Are we interested in the absolute number, or are we interested in the direction of the totals of those numbers?
This is all malarkey. Can we talk about
malarkey?
Yeah, because we're focusing too much on the new highs, the new lows. Let's just.
I'm asking you about the bond market.
Can I show my AD dashboard?
Yes, please, please.
Because this is another way to do it, right? So we're sitting here saying, "Oh, we're not getting much from new short-term highs. Oh, we're not getting much from new short-term lows." JC's talking about how new 52-week highs are basically dried up and non-existent on the
not basically dried up, mathematically dried up.
140 stocks isn't nothing, or 130 stocks.
Yes, it's nothing. Can you throw up slide 4 quick, just real quick, and then we can get into the Strazza's thing that I can't even read because
you don't need to read it. You just look at the colors. It's like a color book.
No, not that one. New slide 4. So this is the question. So we agreed this week that if the bond market is falling, that is bad for stocks, right? So now here's the copper market and the bond market together. New multi-month lows yesterday for Dr. Copper. Are you telling me that the bond market is going to go up while the copper market is going down? So the bond market is just going to all of a sudden turn around out of nowhere, start to go up, and stocks are now going to expand like completely out of nowhere with no heads up at all, just this complete massive shift in the trend for bonds. Is that what you're suggesting?
I think we're doing a lot here. We're doing a little bit too much. What I don't know about all this. Yes, I would agree with you, JC. I would expect or prefer as a stock market bull that these charts continue their upward ascent and confirm.
Well, first of all, they can't continue their upward ascent if the current direction is down. New multi-month lows for copper is not a upward ascent.
So
not to be a stickler, but these are lower lows and lower highs, which are downtrends where I grew up. I don't know how they do things in Connecticut, but where I grew up, lower lows and lower highs is a downtrend.
Listen, the beautiful thing about technical analysis is we can all see our own things in these trends. For me,
it's not my own thing. I really don't give a shit what copper or treasury bonds do. I'm just pointing what they are actually doing.
There was a nice rally off of the October lows for both of these assets.
Indeed.
They've given plenty back, as you're pointing out.
Strazza, do you think that it was a coincidence that happened at the same time?
I think that I'm having one of my best weeks of the year. The stocks that I'm investing in are going up and going up a a this week.
Nobody's asking you about your portfolio. Listen,
but the market is fine. The market.
You could do a YouTube video. You could do a YouTube video later, and you could do your victory laps about your fucking portfolio this week. I'm asking you about the bond market and the copper market.
There's information there, right? And are we getting stopped out of trades, right? Did we have too many Snapchats this week, or did we have mostly cloud flares and Bitcoin?
That cloud flare. Right? Can we give it up for All-Star Charts here? Give it up for that. That was a hell of a trade.
What did we do?
Hell of a trade. Dude,
what did we do?
I got Lindsay blowing me up last night. He's like, "Oh, that cloud flare." I'm like, "Bro, I told you."
Were we loud about it?
By the way, also remember we had the June calls for Cloudflare. Remember how cheap they were? Right? That's why we do that. Because it gives us so long. Remember? No?
Cloudflare?
Yeah.
Yeah. No, it's a good one.
Well, what I'm saying is that's a good lesson. Like remember how cheap volatility was, so we took advantage of that.
Oh, these were long calls that we got into like in Q4, right?
Yeah.
Got
November.
it. Yeah. Great.
November.
These cloud computing stocks, right? So whether it's Datadog, MongoDB, UiPath, this AppLovin, which what a great name for a company.
What a great name.
AppLovin. So good. But they're
And
all
then what do they do? Is it a software stock?
It's this cloud computing. It's cloud computing.
AppLovin. That's a fantastic name.
Yeah, but this group, like, listen, I wanted to talk about cybersecurity stocks yesterday. We didn't get to it because that group's red hot. The cloud computing stuff looking just as good, and a lot of them are earlier in their uptrend cycle, right? Like the bases are just completing in a lot of these. And when I look at this Cloudflare, I think to myself, because I got a lot of exposure to this path. I'm like, path's got to follow. It looks almost identical to it. So maybe this is a path for the rest of the space to kind of move higher from their bases. Datadog.
I got to tell you, this copper is really, really taking a huge dump.
Brett Schaffer knows. Brett Schaffer loves the cybersecurity stocks. Listen, forget copper. Just don't buy copper stocks. In fact, commodity stocks continue to stink. Can't make any money on them.
I know. That's why we shorted coal. Should have shorted the uranium. I knew we should have shorted the uranium.
I'm not shorting coal. So Peabody yesterday had a big sell initially on the earnings news, and then through the call and then into the daily session, really, turned around, ended up closing back towards the highs of the day, flipped it green, and then dragged the whole space with it. So maybe it looks to me as some sort of tradable low in coal. If you look at one of the leaders, Consol Energy, completed a short-term top, you got the breakdown, and right into a key polarity zone from last year, right? So you're starting to see some sort of evidence of bottoming from these names, at least over the short term. We'll see, though. They have been very hot, so I get what you're doing. It's just you're looking for some give back short-term trade. I get it. It's okay. It's okay. But
I think the deterioration in the new highs that we've been seeing has been a great opportunity to lay out some shorts. We've obviously done that. What I find really interesting is that when you look at the portfolio at the shorts on the common side are working. On the index side, they're not. And then when you look at the new 52-week highs list, non-existent, even though the index is making a new high. Like what we're doing and what's actually happening is you can actually see it. Like it's fascinating. It's really interesting. Why don't we bring on Brett Conrad here as copper and bonds continue to decline.
So we'll just never talk about crypto, I guess?
No, we are. We're going to have Crypto Fridays after Brett. Yeah,
okay,
Brett's here.
I would love that. Yeah.
Okay. Strazza's very... Yo! Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Conrad.
Hello. Good
How are
morning.
you, my friend?
I'm here from my palapa in Puerto Vallarta.
Dude, are you ever home?
It doesn't seem like it.
Dude, you're always did you fly there yourself?
No, not this. No, it was a little far. So
too far.
Went commercial, yeah.
How far do you fly?
Well, we've been maybe, one fuel stop might be 900 with one fuel stop, maybe 900,000 nautical miles.
And what is a nautical mile relative to a land
animal? A little longer
mile?
than a statuate mile. So
got it. Fair.
Yeah.
A man of many talents, Mr. Brett Conrad. So you were with us in New York. What was that? 2 weeks ago? 3 weeks ago?
Yeah. It was fabulous.
You enjoyed that?
I was loving the Civilian Hotel too, by the way. That
place is sweet, right?
I dug that place. Yeah.
So it's brand new. My college roommate runs that place. He's run some really nice hotels over the years. So he's my guy. So if you ever need anything hotel-wise in New York City or otherwise, let me know.
Seems to know how to do it.
Now, people who don't follow our work as closely as you do have been giving me a lot of shit because they think that I just woke up one morning and started shorting stocks out of nowhere. You, however, who monitors our daily activity, obviously, you saw how we laid out. I mean, even before we were in New York, we laid out what it would take to start getting more bearish. Because I was a perma bull until a month ago, right? So what are the things? Those things started to happen, right? So we've acted accordingly. So if we're going to lay out what it's going to take for us to get bearish and start shorting stocks, when all those things happen, why wouldn't I get bearish and start shorting stocks, right? That just seems like logical, common sense to me,
Exactly. And I do agree with Strazza, though. You got to kind of look at your own portfolio, see how things are going. Are you getting stopped out? There's just always a lot of data, and it's never, if it was so easy, right, we'd all be trillionaires, of course.
Right.
And so there's always going to be conflicting views, but I think the key thing is bottoms up, top down. See how what I like to think about too is just like the personality of the market in a way. How is it responding to news? When things come out there in the wider world, does everybody freak out and head for the exits, or are they like just kind of they get some news and it's like that was nothing, just keep buying stocks?
Right, they're bullish, man. The amount of pushback that I've gotten from my shorts and the trolling that's coming in is like it's next level, and I'm here for it, right? Like when everybody agrees with me, I'm probably not onto something, but people think I'm freaking crazy. People's heads are exploding just because I can count. And also sentiment. People are bullish. You want to talk about kind of seeing how the market's behaving. Newsletter writers are the most bullish they've been since 2021. And they were telling you so now is when the newsletter writers are telling you to buy stocks now. They were telling you to sell stocks in the summer of 22 when we were buying them. I'm taking the other side of that. I'm taking the other side.
Well, the risk just starts getting higher, right? Like, when things are extended like this, it's you got to be, tactically just, making sure you've got those stop losses in, tight stop losses, that you're continuing to just see those finer points. And you could do a lot in the last couple months of a big rally, so do you want to miss that or not, or how are you going to tactically, like I've started to tactically look at how do I hedge some of this stuff, like with do small cap. It's just been interesting not seeing small caps really tank like I thought over the last few days, but they're hanging in there and sometimes outperforming the other indexes. So
it was a big move in small caps yesterday.
Yeah, absolutely surprising. Yeah, actually. So those are some of the things you got to keep in mind, particularly
with copper getting the shit kicked out of it. Seeing small caps do well yesterday, that was definitely interesting. You had bonds and copper both selling off, and small caps did what they did. That was again, I wouldn't have seen that coming. It's one day now. Let's see how they close the week, right?
Right. And small caps are so sensitive as well, obviously, to interest rates, and should be, because a lot of their cash flows are farther out. And, especially biotech stocks, like they may not be getting cash flow for 10 years, right? So whatever interest rates are, you have to, discount back at those, future cash flows are going to be worth far less in a high rate environment. So, but, on a day-to-day basis, maybe they trade opposite, bonds and biotechs, but you kind of think bonds go up, biotech should go up.
Right, but bonds are doing the opposite. They're going down, and they're moving with copper, and copper's making new multi-month lows literally as we speak. So if your bet is to buy small caps because you think interest rates are going down, the exact opposite is happening. So you should do the exact opposite with small caps, is how I see it.
Right. Yeah. Totally agree. So
copper turns around and bond market starts doing well again. That would be one thing, but it looks terrible. Both of them. So, all right. So Brett Conrad, a man of many talents and skills, outside of biotechnology, has a particular focus on retail. I would love to hear your thoughts. Where do retail stocks sort of fit in the current market environment? And can you talk a little bit about the difference of maybe like a retailer, like a company, that sells things versus like specific brands, right? Because they're two completely different things, right? How do you think about that?
They are. Well, definitely, if you look at vertical retail, and that's a company that designs, maybe they contract manufacture, but they design all their goods. Those goods go into their stores. They typically don't have a wholesale component to it.
That's
So
called vertical retail, when you make your own
vertical
shit and then you
retail.
sell them in your own spot.
Yeah.
Got
Yeah.
it.
So they can control everything. They're controlling their inventory levels. They get quicker feedback from their customers because their own employees are selling to their customers. Margins are typically quite good in those environments, especially when you're not someone like the Gap that's just had to discount their way to staying in business the last probably couple decades. They had their time in the sun probably in the 90s. Haven't got anywhere since. But then we've had some surprises lately in that arena, and that's and like the Abercrombie run here has been nothing short of phenomenal. But putting them aside for a sec, then you have these other brands that can be, you even talked about Disney being a brand, and what's that worth longer term in the market, because that's like that's something that never is on the balance sheet, is how big the brand is. What's the likelihood someone's going to go buy something from that company again? There's a bit, that's a big asset, right? If you have millions and millions of people that love your brand, and just like you're going to take your kids back to Disney, next year and the year after, that doesn't show up on Disney's balance sheet, but that's a big asset, right? That's like future cash flows.
Like the smile on her face, my daughter's face, when Mary Poppins walks by, it's like her head's exploding. She's meeting like her favorite princesses and shit like that.
Yeah.
It's costing me $350 for the Bibbidi Boppity boutique or whatever. You can't. I would pay 3 times as much. You know what I mean? Like, it's crazy.
Yeah, and that's that emotional bond. It just doesn't go away. It won't go away in poor kind of like bad times or good times. It's going to be there, and when people have a desire and a need, they go back. And a lot of these retailers have to connect with customers, retailers and brands. They have to connect with customers really well over time to establish that, and it's very, very valuable. Lululemon does a great job with that, and I've got Elf Beauty up, and
can you throw that up? Throw the Elf.
They've just been a monster as well, and been.
This is just cosmetics, Brett? Like just like makeup and shit?
Yep. Elf Beauty right here, and you can. One thing I like to look at, especially with these vertical retailers, is book value per share. And I know that's a bit of a fundamental indicator. However, it really tells you that the thing's working financially, right? They're opening stores. Usually I like to see stores getting a 24-month return on capital expenditure. When it is a store, Elf is a little bit more of a wholesale brand. They do have stores, but I'd say they've been definitely making their mark on the wholesale side. But they've just connected with customers, and so these young customers, they're not buying like Estee Lauder. They're if we had the Estee Lauder chart up here, you'd see it's pretty bad over time. But Elf Beauty's been taking market shares. They've been.
And what's Estee Lauder's problem?
Again, kind of like connection with the customers. I think it's just an old brand that isn't relevant anymore.
It's down like 70%. Like quick.
Brett, I gotta ask you about Abercrombie and Fitch. We have the chart here. This is a monthly.
Yeah.
For my money, like this is the most hilarious chart on Wall Street right now. It's just so funny to me that this stock is doing what it's doing.
What the hell are they doing, man?
What's going on here?
Well, they've always had good margins, but they really kind of flailed in the the era of talk about back to customer connection. Companies can't just do the same thing over and over and over again and expect with social change going on and expect the same result, right? If they start diverging from that pretty wildly, then they just kind of lose their way, right? Like people just think they're irrelevant because you have to be relevant to what people are thinking, and their whole campaign with guys with no shirts on, standing outside of, like, ripped dudes sitting outside of stores.
Wasn't that one of your jobs, Brett, back in the day? That was you. I remember.
Oh yeah, back when I was in my 20s. And so I think that the company just wholesale made a complete 180 from that, and started making clothes that were relevant to their customer. Kind of like got away from trying to be like super over sexified, and then brought in, they were able to, I think what they were doing is they were so focused on this 15 to 25-year-old. It's a pretty narrow category, right? And I like what Howard Lindzen says about, like, can you have a brand that's servicing like 8-year-olds to 80-year-olds? That's a
right.
Massive.
That's what he loves. He loves that.
Yeah, because when, like, the old Abercrombie, as soon as someone turned 25, they never bought it anymore. Your customer dropped off a cliff. So I think now they're just widen the appeal of the brand, and that you can see it in the results here. Older people are buying it, younger people still love it. You don't have to necessarily shun one for the other. Lululemon does a great job of this, and especially with Lululemon with different body types, because they've got Lycra in the clothes, right? And so someone with and especially women have all kinds of different bodies, and when you can have one size fit multiple types of bodies, it really works, right? Like, you just expanded your market quite a bit, and if it looks good on everybody, that's even better. So Abercrombie's done a nice job broadening that market out.
Brett, what do you know about this Amer Sports, this new IPO? They make Wilson, the rackets, tennis rackets, and sports equipment. Do you know much
Right.
about that?
AS is the brand, is the symbol on that, and so that was bought out of. It was listed in Helsinki, believe it or not. It was a Finnish company that had amalgamated these brands over time, and that was taken private in 2018 by a group that included my brother. He bought 20% of the company. A private equity firm in Hong Kong bought 5%, and then Anta Sports out of China bought about 70% of it. So that group bought it. Basically has been re-engineering the company, and now has taken it back public just a week ago, and it's performed very well. I think the offering was at 13. All the investors, Anta and my brother especially, put money into the offering, so that was like that's got to be a pretty good indicator that your investors are re-upping and reinvesting. And I think
what does your brother know about retail?
Yeah, exactly. I think that he founded Lululemon. Maybe I thought you were being facetious, but
no. Some people don't know who you're referring to.
Okay. Yeah, so Chip Wilson, he founded Lululemon. Him and I have been in clothing business for a long time. He just happened to do the right thing with Lululemon, and again, expanding that market, being in clothing, and really for Amer Sports, their crown jewel is Arc'teryx, which is for anyone that doesn't know, it's an outerwear brand that is just amazing. It's kind of in that premium luxury side of things. So if you look at North Face and Mountain Hardwear and some of these other brands, they're kind of in the nice, but Arc'teryx has this brand positioning that makes it so they can sell $900 Gore-Tex jackets, and they sell all day long.
What is that?
Wow.
Gore-Tex?
Yeah.
Gore-Tex is a waterproof, breathable membrane that goes on is laminated typically to nylon in a jacket. So it makes it so you can go out in the rain and it can be pouring outside, but your internal moisture as you sweat will make its way out of the fabric. So
wow, that's fancy.
That's amazing.
Yeah, it's been a great, incredible brand name. Not that there aren't other systems out there in this day and age that do the same thing, but Gore's just got a great brand, and manufacturers can then up the price of their jackets by a few $100s if it says Gore-Tex on it, even though
Right. Excellent snowboarder, Brett Conrad. Excellent snowboarder.
Yeah, not bad, huh? Not bad.
Pretty good. Pretty good. We got to do that again, by the way.
Yeah, definitely. Yeah, I'm excited.
Can you throw out? I think we're gonna do Utah actually, because it's easier to get to. Breckenridge, the altitude kind of messing people up, So yeah, a little better. What's the difference? What's the base in Park City? 6,000?
7,000. Yeah.
1,000. Like 9.5.
Brex, yeah, and it's dry. People get headaches just going up there. Yeah,
remember people were dropping like flies. Maybe not you or me, but people were hurting bad. Spencer would not be able to handle the altitude. Not,
I mean, I've been to Denver.
Denver's nothing. Denver's 5,000, bro. It's nothing. It's a joke.
Right,
They double that. So
I couldn't breathe in Breckenridge. I couldn't breathe.
It's tough.
Yeah,
it's 1 day for every 1,000 feet, right? Is that it, Brett? Every 1,000 feet of altitude, it takes you 1 day.
Yeah, maybe that's it. Yeah, I was thinking too. We can get Arc'teryx to sponsor our next chart summit.
Now we're talking. Cool. Let's go. Can you throw out? I want to ask you about Biotechs, but can you throw out maybe?
We had
about. Throw out maybe some like obscure Chinese retailer that we should take a look at, like something that like is not on our radar.
Oh my goodness!
I mean, Chinese. I'm being obnoxious. So, like, is there like a brand that maybe is not on the radar that we should kind of keep an eye on?
Besides Amherst Sports, because Amherst Sports is interesting because they've got that. Just talking about China, they've just got such good distribution in China, and they're the ones that are doing all the big store rollouts there. And if you think about Lululemon too, just what's been on fire for Lululemon has been China lately, even though the Chinese market has not been great. But Lululemon's approach has been they've been very methodical at China. So they've been in there for the last I'd say 15 years, but it's just been a very slow build. Like one store, they've thoroughly tested it all out, and now you've got Arc'teryx, which is opening stores in the super premium category, and if they can get summer figured out, because you can't really have a store based on wintertime. So I think that's a good call. But other than that, you guys have covered like Pete Duo, right?
How can you not? I mean, it's the only thing working out there.
I know.
You know what I mean? Like, is there anything with that comes from China that's been working? Maybe some of these educational companies, but like that's it, right?
Yeah.
And what are they doing? Are they like the Amazon basically? Yeah, right.
Yeah, a little bit. Yeah, there's another one called Coupang CPNG out of South Korea. That's more like Amazon, that has 2-3 hour delivery throughout Korea.
CPNG.
How's that looking these days? We were involved.
Terrible.
Well, we were involved early in that pre-IPO. It did fantastically because the IPO worked. But yeah, it's kind of not done as well over time. It hasn't aged well.
It's based in Seattle. Are they based in Seattle?
Wow. I mean, 99% of their operations are in South
Korea. That's interesting. Yeah. Now, what about the biotechs, right? So, why somebody with your experience? I mean, granted, you're a man of many skills, so I guess it shouldn't be surprising. You're a well-rounded individual, but biotech junkie is just not. I know you and I know you are, but like I'm sure people who might be meeting you for the first time wouldn't like peg you for a biotech junkie, right? How did
How the
that
hell?
happen? What happened?
How the hell did I get into that? I think I got involved with a couple deals, and we that turned out really well. And I've always just kind of been a bit of a science nerd, so I like to look at potential for some of these companies that have groundbreaking medicines. But man, let me tell you, this is not a market for, especially investing in individual biotechs. It's not a market for the people that don't have a lot of patience in a lot of cases, and that's why technical analysis really works well in these cases, because you can have long time frames between announcements with these biotechs,
Yeah.
right? And stock becomes like a rope; it gets a little heavy in the middle, and then say you've got say you're gonna have a big data readout in 11 months, and it could be like massive for the company, like 10x if the data is good. If the data is no good, it's a zero. But that anticipation is, well, first you got to wait 6 months, so everybody gets bored, stock goes down, 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 and then a couple months before the data readout will start going up in anticipation that the data will be good. So that's just something good for y'all to keep in mind if anyone's thinking about a biotech, especially a small one without revenue.
Anything above $1 billion, 700-ish, we like to stay above those levels. Anything we should anything on your radar?
Right now in biotech, in the kind of like mid areas. Yeah, there's maybe this is a little small, but Xeris, XERS, maybe y'all can bring that up. That's one that's got their drugs on the market, growing revenue. I particularly like it. I own it. I think the market's underestimating the growth rate in that XERS, and maybe Spencer can bring it up on the screen here.
XERS.
Yeah,
We do not have the chart handy.
Xeris.
But
okay.
I was thinking of you the other day.
Little small, right? But it's liquid.
Yeah.
New highs are expanding in the biotech industry group, and we do have some really good looking charts. We're actually going to do a post on short squeezes, which is like dominated by a bunch of biotech names. That should be out soon.
Yeah, it's been. I feel like the last few weeks have been consolidation, and again a little bit depending on what bonds do, but I think we're gonna
bonds are getting the crap kicked out of them. Why don't you go to slide 2, Spencer? There it is. So this is Xeris. Am I saying it right, or is it a Xeris?
Well, Xeris, I think it is.
Xeris. I was 0 for 2. Okay.
I'm at this resort called Zinalani. It's XINALANI.
Dude, if it starts with an X, it's just a tough thing to start a word with the letter X.
It is. Maybe that's the bad thing about this company. It starts with an X.
Yeah, it's a fade all day.
Yeah.
What else? What else you got?
Anything else? Break out here, maybe above 3.
It's got work to do.
People want to take a look at. Yeah, it does. Look at all that overhead supply to the left there. Yeah.
Atta boy. Look at you, Brett. Look at you. Tell him, Brett. Tell him.
Trying to be a little technical here. Exactly.
I'm into it.
So I'll have to see.
Any others?
Maybe these just kind of like going back on the bond thing. Maybe the market's more thinking, well, we're gonna have this, rates are gonna be up for a little bit, a little bit higher, a little bit longer, but some of these biotechs have cash flows 5 years out. Maybe it just doesn't matter as long as people are thinking, 2025, rates are gonna be, coming down again. It's a little hard to tell. There's so many intervening things in there, right? That inflation and Strazza, what's your take on 2025 rates? Are we going to start
2025?
I know that's far out, but are we going to see some? Are we going to? Is this going to? We going to see some big cuts this year, or is it going to be? They're going to put them back, put them off.
I think you'll get a handful. You're going to get between 3 and 6.
I think we probably get a rate hike this year. Actually, the way the bonds are trading. it doesn't look like rates are going to go down.
What?
Looks like the bonds are going to go down, and mathematically, for bonds to go down, which way are rates moving there? Brad?
All right.
Yeah.
Okay.
I'm being a little obnoxious. Maybe not.
Yeah.
Maybe they weren't going to raise. I don't know. I don't talk to the Fed. They don't talk to me. So
Yeah.
probably better that way.
I think sideways to lower, Brett. So it should be a tailwind.
Hold on. Before we get Brett out here, I want your thoughts. Was there a number this morning? There was something this morning, right?
What, economic data?
Was it a farm payroll or something, or a CPI or something?
There was an adjustment this morning. I wouldn't call it a number. It was like
What is an adjustment? It's explained to us mere mortals what that. A revision?
A revisi?
Price is never revised, by the way, for those keeping score at home.
Revision and adjustment. What's the difference?
For jobs? How many jobs do we have? Too many? I don't know.
I think it was hold on a second. It was like a CPI adjustment, I think, or a revision.
Yeah, November CPI revised higher from 0.1% to 0.2%.
Not a big deal. They do this they do it 2 times. They revise it twice. So it's not new.
Nothing.
0.2 is up month over month, or is that year over year?
Month over month.
So are they lying to you and telling you that inflation's going up or inflation's going down? Which
No,
lie?
they're not lying about anything. It's disinflation. Nobody's talking about deflation.
So
right?
disinflation is inflation but at a slower rate of acceleration. Do I have that right?
That's right.
Hey, who's paying attention?
So they're just looking for a normalization in the inflation rate, and it looks very much like that's where we're headed. So
the market wasn't surprised. The market wasn't surprised by that. Everybody all knows that.
It's not a market moving event. It never has been.
Yeah, I don't think so.
Well, if you look at these commodities too, right? They've been. I mean, oil's been low. Gasoline preceded, right? Gasoline preceded oil. It started to drop earlier, and now I keep seeing cuts at the pump. Been in Mexico for a week, but before that, I mean, we're seeing $2.60 a gallon or so in Utah right now. And I know when I go back to California, it's like 50% higher, of course, or more than Utah. But even they've been seeing lower prices based on where they were. So I think that helps, right, with inflation. And also, one thing I wanted to point out, I've been seeing more housing inventory on the market, like we're in St. George, where there's been a tremendous amount of growth and huge demand, but demand's coming off, and that's going to filter its way through the builders, I think, over time, and
inflation. That's also going to flow through to inflation and be a big reason why inflation comes down.
We shorted home builders yesterday.
12 home builders made new highs yesterday.
Got it. All right. Well, we'll see them on the new lows list soon as we're taking our profits.
Yeah, you might. Yeah, it'd be interesting to maybe short nail, NAIL. I like to short
NAIL. What is that?
That's nail. That's the inverse home builder.
Of course it is. This guy loves his triples. You love your triples, Brett. Like you're like a meme trader, like in the body of an adult. You know what I mean? Like you should have been in that movie. What was the movie that they did? Yeah. Dumb Money. But you're not. But you talk like one. You know what I mean? You got your triples.
That's a great movie, by the way.
I haven't seen it. Is it good? Is it good?
Oh, Dumb Money. Yeah, it's really good. It just kind of shows you, as a trader, anything can happen, like literally anything. And I think you got to be aware that, whatever you're in, price could go up, could go down. You don't know, right? Like,
but you have to learn that the hard way. Don't you have to learn that the hard way, though?
Yeah.
And I think we all have. So.
Oh, my mistake. Nail is the 3 times bull. Wait, they got rid of their 3 times bear?
Nail's the 3-time bull. Is there a 3-time bear as well?
I thought there was. Maybe they got rid of
it. If they took it out, then I kind of want to short more home builders.
No, they're always adjusting. JC, don't
overthink that. No, all right, because copper's down a full percent. So I think we're going to be adding to our short positions today. Brett Conrad, I appreciate this, man.
Thanks a lot, Brett.
Okay, hey, you're welcome. See you guys later.
Have fun, dude. Have fun.
Thank you.
Guys, really,
Honestly, if I were in Puerto Vallarta, I would not be talking to you guys. So
at 7 in the morning, no less.
he's a junkie, dude. He's a real degen. Like, he loves this shit, you know?
I love talking to Brett about particularly retailers and biotechs. Just a lot of knowledge about both of those groups. Why are you calling me a Jewish grandma, Rachel?
What?
Because you were like, my belly hurt in Breckenridge.
Oh, terrible. Yeah. Couldn't breathe. My asthma.
All right, can we do a little
crypto?
Is there any news, or can we get into the Crypto Fridays?
I have so much to say. You know, you got, hold on. You didn't let me talk about my breath charts. I had a beautiful breath cycle chart, Grant marked up, one of my favorite charts. You didn't let me talk about my advancer decliner dashboard. Now you're not letting me talk about crypto. It's 9:30. I have trades to make.
I don't know if you heard. I specifically said, let's get into the crypto. Those were my exact words.
We're doing it.
Because I got, you know, I gotta.
We're doing it.
Great bumper. It's a great bumper. All right, Mr. Bull Market Shirt. What do you got? Tell me why I need to flip the book long one of these shit coins.
God damn it, man. Okay. Yeah, so Bitcoin 47K. It looks like we're getting some continuation or an upside resolution from this little continuation pattern that formed starting back in December, off of that rally, off of the Q4 lows. Next, I want to show Solana. If you want to throw up the Solana, I think this one's even more important. Leaders keep leading in this market. It's been true for stocks. It's been true for cryptos, and I think it continues. You want to see Solana resolve this continuation pattern higher. The best ones, the strongest ones are already going. Celestia really stands out. This AKR that I brought along, you saw Link resolve higher. So that list of upside resolutions from these little multi-month continuations is at least starting to exist, right? We don't have a lot of them, but the early leaders are going. Solana, I think, is a big one. We're above the AVWAP. We're above this little, you know, we got this little channel breakout. So moving in the right direction. You want to see Solana back at new highs. In terms of vehicles, though, I really, really think these bases that we just checked back in at the base breakout level, Coinbase, Mara certainly stand out the most. We've been talking a lot about them this week. I just think how clean these charts are, right? Retesting at the exact level that we would want to get into to bet on a new uptrend, right? Because when these bases complete, what does it tells us? The trend has shifted from down or sideways to up. And you juice your risk reward or your chances of having the best risk reward by getting in as soon as that reversal completes, right? So these reversals completed last year, then a hard throwback right to that base breakout level. Marathon even scooped below it a little bit, which I like because it gives you that little juice, little bear trap move when you break back above it. And we're seeing that out here just these past 2 days. I think we're up like 35%. So I think really well defined in these two. They're proven equity vehicles for the crypto space. So these would be at the top of my list. Some others that I have mingled with recently. Let's do the injective fonds. This one has been such a leader. Injective protocol. It's INJUSD. I think this consolidation resolves higher just like the last ones. And when these little ranges resolve, you tend to get some monster moves, right? We got 100% coming into the November consolidation, another 100% just in a couple of weeks in December into this consolidation, right? So this one's going to give you that beta. I like it a lot. And then optimism. I'm an optimistic guy. So this one is really my vibe. The OP, you have a really clean level here against last year's highs. You got a little scoop move below it. Trap the bears. Let's go take out that VWAP. That'll give you your confirmation. Target lines up pretty much with the pivot highs from late last year around the 161.8. And in terms of Coinbase and Mara, I think, you know, for most people, these will probably just be trades. And I'm definitely trading some today just because of the way I traded it. I'm in vehicles that I have to sell today. But I think the pivot highs, you know, if you're trading this, the pivot highs, that's it. It's going to be a beautiful that's going to be a really nice return. It probably happens really fast. So, okay, let's talk about what I had to do yesterday afternoon. I'm looking at Mara. We talked about it when I bought these calls last week, and I spread them out. 3 expirations. Some expire today. Some expire a week from today.
That's true diversification for those of you
From today.
paying attention. Strazza is so diversified.
Yeah.
He bought call options that expire 3 different expirations. So
He
like
bought
that's
the
like
weeklies and
very
monthlies.
true. That's how to diversify.
No, anyway,
All right,
keep
sorry.
going.
All right.
Keep going.
Good
Keep
Okay,
going.
guys.
Keep going.
Listen, I make concentrated bets when I have conviction, and that's just kind of what I do. It's not for everybody. I trade high risk vehicles, and a lot of times they do go to zero, but then the winners should make up for all those zeros. This is a good example of that. So I'm asking myself yesterday, Alfonso, I was probably driving him crazy. I'm sitting there, we're trying to meet about something, and I'm
Poor
like, okay,
Fonz.
what do I do with the calls that expire tomorrow? I said, okay, what has happened in the past when Mare has been up 20% in a day? I went back to the cycle lows from 2022. What you'll find is if you're looking at just the very next day, sure, I think we've had 8 occurrences. They're marked up here. 7 of them are marked up in the lower pane here. This is the 2-day rate of change. The 1-day rate of change is on top. What I found was of these 8 occurrences where we're up 20% one day, not only do we tend to be up the very next day, but we've been up like 30% the next day, I think 3 or 4 times. So what I've shown in the lower pane is I've matched up the 1-day rate of change and said, okay, whenever you get a 20% move one day, what's your 2-day rate of change? 8 occurrences of a 20% one-day move since the cycle lows. Of those 8 occurrences, 7 times the 2-day rate of change the next day was 30%, which means you tacked on another 10 the very next day. We're seeing this right here. For that reason, I decided my odds of holding these calls would probably, I'm probably better off holding these calls than actually selling them. So I did.
Strazza, I got a question for you.
What? They
What
could
do
have
you-
very well gone to zero.
What do you think the leverage ratio here in the current environment is with Bitcoin and Mara? Is it like a 3 to 1 or is it more? It's more, right? 4, 5?
Hold on. The leverage ratio of so the beta in Mara, dude, it's like 5x. It's like
5x BTC, not 5x SPY. 5x
Yo,
BTC.
I would think of it as BTC, right? I would think of this more as a Bitcoin vehicle and benchmark it against Bitcoin rather than
Agreed. So you think 5 to 1? I was thinking like maybe 4. You think 4 to 5?
Okay. I just got filled 350 for the 2920s. Yeah, it's like 5x. I mean, just look at yesterday. What we get 20% in the miners, 2% in Bitcoin. So sometimes you'll see a 10x in a single day. But bottom line is the beta is very high, and that's why I tweeted it the other day. We talked about it on here. If you believe we're getting a new leg up in crypto, of course you're starting that thesis with a Bitcoin chart, but you definitely don't want to end at the Bitcoin chart. You want to end at something higher beta, right? To kind of juice your returns on this next up leg. I think Mara gives you that. I think Coinbase gives you that. I think a lot of these altcoins give you that. I think Solana should continue to give you that. But I don't think, piling into Bitcoin here at 47 and wanting to trade back to 65, you're going to get a double or a triple in Mara by the time Bitcoin gets to 65.
I'm going to tell you guys something that I had to learn the hard way young in my career, my friends. Buying things below overhead supply is not a good way to go through life. I have been in the camp, again, because I learned this the hard way. I'd rather pay more knowing we've cleared a resistance than trying to be a cheapskate and trying to anticipate. You get what you pay for in life, folks. You get what you pay for, right? You want to buy a cheap mattress, you're not going to sleep as well, right? You get what you pay for, right, Spencer? Tell them.
Yes, but also I have no notes for Steve that this worked out. This was a great trade. No notes, right? It was no. Yeah.
But buying Bitcoin under 47, I like buying Bitcoin above 31. You see the difference, right? We didn't want to buy Bitcoin below 29. Strazza and I talked about it. He actually did, and it actually worked out really well for him. But me personally, I can't do that. Too many. See these gray hairs right here? I might not see them. I got a nice hairline going, but I got them.
You like to trade the ranges more than me. I kind of just like to buy the reversal and then kind of step back a little bit. I think it's a time frame thing again.
Yeah, buying below resistance. It's not fun for me. It's just, I like to have fun. You guys know
we
me.
talked about
I have
it.
a good time. You know,
I liked 25. Remember,
you did 26.
25 to
Yeah, I
31.
remember. Yeah,
I was, we talked about it then.
that's
The
right.
bottom
Listen,
line
there's no right way to lose money. All right.
the bottom line is, right, if you believe it's a new crypto bull, I think you can be a little bit creative in the vehicles you want to use. I think you get a lot more, you get better risk reward profiles as you move out on the risk spectrum to, some riskier, more speculative assets. I'm talking about the altcoins. I'm talking about the Bitcoin miners. I think Coinbase is a really good one. If you have a longer time frame, you want to kind of ride out the whole cycle. Coinbase would be my favorite option for that. Let's throw up one more. Galaxy Digital. This is another one that
This is
should
tattoo guy, right? The tattoo guy.
This is Novogratz, and I call him crazy, but I kind of like his style. I like the way he's run this firm. I think they've taken advantage of a lot of the blowups in the space, right, and really benefited from that. They've taken on a lot of AUM, like you see in the note here. So I like this one. It's clean, right? This is another one. So
I saw an interview, Strazza, with Novogratz. There was just some conference. I forgot the name of the conference. I saw a couple of interviews actually from that conference. He was one of them. It was like a week ago or something. Well, at least the videos were released a week ago. And he was talking about the tattoo because he got the Luna tattoo.
Yeah,
and then it blew up. So they were talking about it.
Yeah.
And you know what his answer was? That he's going to leave it. As a good reminder of, anything can happen, things go up, things go down, I thought that was cool.
A lot of these loud crypto guys caught a lot of shit, right? Like they will in any bear cycle. But I like Novogratz. I always like what he says. I think he's a funny guy too. And it's not about
he's a Wall Street guy
yes,
that got orange pilled, but he was Wall Street first.
He was a very successful hedge fund manager. It wasn't some new guy who just showed up on the street and became a crypto expert. This is a guy who's been around Wall Street for a long time, and I like that too.
But like you and I, we come from TradFi, but we're not like crypto experts. We're just buying things that are going up and selling the things that are going down, or trying to anyway, right? So, but we're Trad. So are we still TradFi guys? We're still TradFi guys.
TradFi till I die, dude.
Oh, TradFi till I die.
That's where I was raised in TradFi. I'm not. That's my space, man.
And you are like an old Jewish woman,
sure.
At a young age, at a very young age.
Why not Italian? Is it the nose?
You could be an old Italian woman too. This kind, they're not. Are they that different?
No, they're not. They're not. So throw up I just want to do one more because we did a lot of work on this last night. Throw up the Mara study of the 63-day, right? Because I'm sure a lot of people are probably in this against this 19 or like JC said, 21 level, which I think is great for confirmation. We're there now, the VWAP. If you go out 3 months, a quarter, 63 days, following one of these 20%, daily moves, it's one of the studies, Fonz, one of the back tests. Yes. So this is showing you going out 63 days. Not only are your odds of being higher, about 2/3, which to me isn't great off of a short-term thrust reading, the 67%, which you see the probability of gain down the lower left. What does stand out though is the 135% average return over that 63-day period following the thrust, right? So if you do have a longer time frame and you're looking out over the next quarter, I think, and you're in Mara or any of the Bitcoin miners, I think that this back test should make you more comfortable or even increase your conviction, right? Because you're higher 2/3 of the time and you're getting about 135% on average. So the move yesterday is a nice way to kick off a new up leg. That's all I got for crypto, guys.
Oh, is that all you got? Man. I mean, you might as well have just taken the whole show. No,
that was great.
It was great. It was great. Well done, Strazza. Well done. Well done. Good job, Strazza. Great job.
Thanks.
Great job. Everybody's like, can't wait for Louis to get back.
No. Steve's getting a ton of props in the chat for his Mark call. Right?
Can you, Spencer, throw up slide 4 just one time? I think it's really important. We only have a few minutes left in the show before the weekend gets here. I just want to throw this out there one more time, and I'm just going to ask the audience. I'm going to ask Strazza. I'm going to ask Spencer Israel. As copper's down a full % right now, making new multi-month lows, so no evidence at all that yesterday was a failed breakdown of any kind. More so more so just a downtrend, because where I come from, where I grew up, a downtrend is a series of lower highs and lower lows, which copper by definition is doing exactly that.
Mhm.
The U.S. Treasury bond market peaked on the exact same day as copper, making lower highs, no lower lows yet. Let me ask you this, and the audience, are you going to bet that copper is doing what it's doing, but the bond market is going to ignore it completely, and then completely out of nowhere today or Monday or something, the correlation is going to change, and they're going to move in opposite directions? Is that the bet that you're going to make, Strazza?
I'm not making a bet on this chart. My takeaway from this chart is simple. Don't buy copper, and in fact, then don't buy bonds either. You don't have to buy these.
Again,
Not
nobody's asking you what you're buying. Nobody gives a shit. You've already made your point. My question is, are bonds going to just turn around and go up as copper continues to break down to new lows, down over 1% already right now, 1.05% down on the copper today? Do you think, nobody cares what you're buying, do you think bonds are just going to turn around out of nowhere today and start to go up as copper's breaking down to new multi-month lows? That's the question.
I really don't know, JC.
Oh,
And
how convenient.
Not.
How convenient.
Probably not.
No,
Someone as
probably not.
opinionated as Strazza now all of a sudden doesn't have an opinion.
No,
how
probably
convenient. How convenient.
I have an opinion on things that matter to me. I don't want to cloud my process. I'm not weighing
Just a question. You really have no opinion. You think
no,
none whatsoever. Okay, Spencer Israel, someone who's more pragmatic here. Spencer Israel, do you think that the bond market is just going to randomly, completely out of nowhere, turn around and start to go up in an environment that copper is breaking down to new multi-month lows? Do you think that's what's going to happen?
That depends.
Or do you think that the bond market is going to follow the copper market?
Is Jerome Powell speaking today?
I don't know who that is.
No, probably not. But the answer is probably not.
Does he play for the Yankees?
Next year he might actually. Non-roster invitee. No, probably not. But I'm sort of with Steve.
And if the bond market, let me ask you this, geniuses: if the bond market follows the copper market to new multi-month lows, how is the stock market doing in that environment? Anyone? Any takers?
I mean, look, couldn't you do this with other commodities too?
Copper would be the best.
Thank you, Strazza. Thank you. The answer is no.
Why not? Can we do TLT versus cocoa or S&P versus cocoa?
That looks fun. This is the doctor. So the theory here is that this is akin to railroads or semiconductors, right? This is
I get it. I understand that.
Lifeblood.
All I'm asking is, do you think the bond market is going to go up while copper's getting the crap kicked out of it? And if your answer is yes, then fine. You're betting on the correlation changing. Great. You have the right to do that. However, we know that the higher probability is that the correlation actually remains in place, not randomly reversing in the middle of a day. It remains in place. Therefore, if copper continues to make new multi-month lows, the bond market will follow, which means interest rates go which direction?
What
and
about
if it's going up, how are stocks doing in that environment?
I think we have big levels.
Stop going up 2 fucking months ago?
But I would rather just look at a chart of interest rates, draw resistance at the 2022 highs, and set my line in the sand there.
Why don't you go do that? And I will follow the copper market that continues to break down. By the way, that second peak, that lower high in the bond market, copper peaked a couple of days before that. So it's already been a leader. So when the bond market is breaking down to new lows next week, we can say the same thing. Hey, copper was the leader again.
What about
and if the bond market is breaking down to new lows next week, how's the stock market doing?
What about copper just not making new lows?
But it is.
Well, for the moment.
And yesterday and the day before that too.
For now.
So, yeah. Remember, we're not talking about what might happen, what could happen, what should happen. We've had a lot of success over the years focusing on what actually is happening. So yes, the copper market could go up, but it's not. The bond market.
I didn't say go up. I just said not go down.
The correlation between bonds and copper could change, but it's not. The number of stocks going up in the stock market could start to increase, but it's not.
JC, what do you think about we got to get off the copper. What do you think about my dollar stocks? tweet. So let me read what I tweeted yesterday.
I don't read your. I don't think I follow you on Twitter.
I don't think I follow you either. No.
Right.
So Fonz tweeted a gangster chart of the dollar index DXY and the S&P 500, showing that inverse correlation, and also then showing how that inverse correlation has kind of given way, at least to start this year. So the dollar has been rising steadily all year.
As who?
I'm going to read you these stats. The dollar has been rising steadily all year. Dixie is up about 3.5% from the 12.27 low. After a brief sell-off into the first week of January, stocks have also been rising steadily all year. Again,
which stocks?
The S&P 500.
Which stocks have been rising steadily?
S&P 500 is up almost 7% from the January 4th.
But you can say the same thing about October. The S&P 500 was falling the entire month, but stocks stopped going down October the 3rd, the day that the dollar peaked.
Great. So listen.
So what are you going to say, that October, the correlations changed? No. You saw it in the internals, and just like you're seeing it now. The market's not up in January. It's down, buddy. Go count.
Oh my God, dude.
How many times are we going to have the same argument?
Forget about it. Forget about it, dude.
I don't know what the fuck you're talking about. The dollar peaked on October the 3rd. That was the day that the new 52-week lows list peaked. So, and if by your math, right, what you're saying is that the correlation changed in October also, when it didn't. The reason we were buying stocks so aggressively was because the dollar peaked.
We made a deal yesterday.
4 weeks before the S&P bottomed, by the way.
We made a deal yesterday. I'm going to send you 2 key lime pies on dry ice, but you have to cover all your shorts to get them. Like they're going to bring you the key lime pies, and like instead of signing for it, they're going to be like, "Did you cover your shorts?"
I'm not going to lie. At the rate that the market continues to deteriorate, I'll probably be covering my shorts for profits before your pie gets here. And I asked for 2 pies, by the way, so I could freeze one.
No, I said you're going to get 2. It's like 2 to 3 days shipping. Yeah, we're coming, baby.
At this rate, I might be covering my shorts before that. I mean,
I hope so.
These are turning pretty profitable, I might say.
Listen, can we talk about this breath cycle? I just fell in love with this chart. Shout out the homie Grant.
Don't tell me it's the one with the net new highs. I can't look at this.
This is the Hurley method. How could you talk shit? This is we didn't do this. We took this from Mike Hurley, dude.
I specifically asked for an absolute new highs list.
I know, but we need something. So the reason why we can't do it, right? We were talking about last night. The reason we can't do it is because we need something to illustrate the fall day. JC, you know what I mean? You're not going to see it in new highs drying up. You need to see actually new lows appearing. So you need some sort of. So I told Grant to flip it and do just new lows, not net. So I don't know. This is not what I'm talking about, but this is something that we've been looking at daily just to.
To what's on the screen. Spencer Israel is not listening to what I'm saying.
Dude, speaking of that, actually, I do want to bring Alfonso on. Alfonso has charts, so we're running out of time here.
Oh my God!
Thank God, somebody with some logic.
Alfonso, you ready? You're coming on.
Come on, Fonz.
Hey guys.
Fonzie.
Hey.
How's it going?
Fonz, let me ask you something. If copper is breaking down to new multi-month lows, you think the bond market is going to break out to multi-month highs?
I don't think so.
Yeah, I don't think so either. Why don't you teach these kids? Tell them, Fonz.
I don't think anyone argued with you.
Yeah, no. That's a great chart that you showed. It's not just copper breaking down. It's not just bonds not catching a bit with along with the stocks, but all these divergences we're seeing out there, are telling me to be like a little bit more cautious. However, the primary trend is still pretty intact in most of stocks and indexes. So for me, the chart I was looking this week was this triple pane chart: consumer staples versus S&P 500, low volatility versus high beta, U.S. Treasury bonds relative to high yield bonds. So I mean, I think the main question, the big question is, are these like failed breakdowns? And if they are failed breakdowns, we reclaim the shell former lows from 2022 and 2021. I think we will see some pressure in stock market. However, we haven't seen that yet. So I think this is like my shit chart. I could say.
Right.
So
This is Fonz's guiding light. This is the chart he's every day to see if it changes.
It's a good one. It's a good one.
Yeah.
yeah, definitely.
Okay.
I love to see these relationships for more information. So yeah, this is basically my chart.
It's a good one.
So what? If these are bear traps and we shake higher, then that's the signal.
Yeah, that's I mean, these defensive stocks, consumer staples, low volatility, start outperforming their peers. That speaks of a defensive behavior.
I have something to
defensive
say. Remember that one thing? Remember that one smart thing you said this week, Strazza, about how we've seen a deterioration in new highs, but we haven't seen the expansion in new lows?
I got charts.
Remember?
You won't let me show them.
So Strazza's point is deterioration in new highs, no question. Nope, you can't argue with that. It's just math. But you haven't seen the expansion in the new lows list yet. What I think is that if and when you're going to get the expansion in the new lows list, you're also going to get breakouts in those three charts that Spencer just took off.
No.
Yeah, 100%.
Those three charts break out on the same day that you get an expansion in the new lows list, which we have not got.
That's right. So this is what it looks like right now. Really a nothing burger, but those things would happen together, you would think, for sure. Yeah.
And you're going to get like a serious expansion because we've had no new lows, right? So it's really going to stand out. Like you're not going to be able to you're not going to be able to close your eyes and pretend it's not happening. Plus, you also see the market getting the shit kicked out of it too. So
yes, but I don't see it happening. Can we throw up the breath cycle chart really quick? I think this is such an important point because you're talking about
copper down 1.25% already, continuing to make new lows. A lot of investors out there betting that the bond market is going to go up.
That's you talking the market down, GC.
I doubt that. I doubt that.
This chart, go see it on my Twitter. Great job, Grant. We still do a ton of work around breath, but we talk about it a whole lot less than we did in prior cycles. And that's because we continue to learn from our experiences. And for me, there are three events. There are three events during the market cycle for breadth that matter. You have the initiation, which is the thrust, right? Typically preceded by some sort of exhaustion also. The thrusts are highlighted, circled in green in the lowest pane, okay? Then you're also just about guaranteed to have divergences after those thrusts, right? You'll always have a thrust. You'll always have a divergence from that thrust. You can look at them in the lowest pane. You could also see divergences in the net new highs that tend to correspond in the middle pane. The next thing that you're guaranteed in the breadth cycle, and you're not even guaranteed it because during the COVID cycle, we didn't even get one, but a fall day. The fall days are shown with the red horizontal lines. The fall day lets us know, okay, now we need to look for those new lows to expand more and watch the price charts, have our risk levels in place to protect ourselves because we're anticipating downside. Okay, so the fall day is really the bearish initiation, right? And those are the three things that you're guaranteed: a divergence and then a thrust in the other direction.
And I don't think Hurley is focusing on the net. I think he's looking at the absolute.
No, I'm positive he's focused on the net. We literally copied him. I promise you. This is the Hurley method.
Yeah, well, I like the JC method better where we look at things on an absolute basis.
Dude, all right, fine. We have really smart friends who are excellent at this, win Dow Awards, so it makes my life easier. I don't have to recreate the wheel.
We have too many friends that are smart and win Dow Awards. I know.
Shout out Andrew Thrasher. We're going to be hanging out tomorrow.
What, because Andrew Thrasher jumps off a building, I'm going to go jump off the building too? No, he's got to do what he's got to do, and I got to do what I got to do.
We're going to be watching the Super Bowl on Sunday. We're going to be talking about breadth. We're going to be talking about volatility. I'm going to be talking about cryptos.
I'm going to be eating oxtails. I don't know. I'm going to be talking about breadth on Sunday.
As excited as I am to go to a conference, boy, I wish it wasn't an ETF conference. I wish it was a crypto conference. Let's go. When I'm in Miami, I like to do crypto things,
Crypto conferences are funny.
Crypto conferences are funny.
Quick,
that's for sure.
They are. Quick recess, and we're gonna hop.
All right.
No, Todd Stone will be there. Todd Stone will be there, Mike. Oh, and shout out Mike 203. Love it, dude.
I sent. I went to college in the 203. I rep it.
Right.
I sent Strazza pictures of my marinating yesterday, of the oxtails, cayenne pepper, samba olik, and the chili oil, all mixed in there together. That's how to do it.
Me and Fonz were on a call, and I forgot I was sharing my screen. You sent me the picture of the fats, and I'm like, oh, and he's just laughing at me. I'm looking at
the oxtails had a little too much fat on them still for my taste, because my butcher really likes the fat a lot, which is fine. So I cut them all up, and I have like just this mound of fat that I'm not really sure what I should do with them. Should I sear the oxtails in that fat as opposed to the I have like a Wagyu the tallow, the beef tallow, Wagyu tallow. I was going to use that for the sear. You think I should use that fat instead?
Tallow's the butter?
It's lard, but from cows.
Yeah, okay.
It's lard from cows instead of a pig.
So that's what I was thinking. With all the fat you have, like, can't you make your own like oxtail lard? Like, that would be cool, dude. I think so.
I think so.
That'd be cool. I wouldn't waste
Billy
all
says
that.
sear it in the fat. All right, I'll sear it in the fat. All right, I'll do that.
Cool.
Use the bacon fat for beef?
No. Too salty.
Yeah, I'm gonna use the fat, see how that goes, and if it's not going well, then I'll bring the tallow. Gotta have a big tub of tallow at all times.
Apparently so. All right, and that is our show for the day. Fun one. The last couple of days have been good. I mean, every show is good, but the last few days have been feels like the temperature has been ratcheted up. I've been enjoying it very much. So
we're having fun. We're having fun.
Yeah. All right. By the way, Steve, JC, Alfonso, I did not forget about these Super Bowl squares, so you'll be seeing a link shortly for that.
We're doing it.
I got it set up. And thanks to our guest today. Thanks to Brett Conrad. Thanks to all of you for watching. We'll be back on Monday. Special guest on Monday's show, Mr. Josh Brown. So stay tuned.
Nice. That's fun.
That'll be fun. Smash the like. Go make some money. Have fun watching the game wherever it is, whatever you're doing, or not. And,
vegan Super Bowl party. That sounds like my worst nightmare.
Yeah, no, don't do that. So 11 o'clock Spaces, join us with Jason Purrs against all odds, and then 1 o'clock we had to reschedule Hot Corner from Wednesday. So 1 o'clock, check us out, Stock Market TV.
1 o'clock Hot Corner. That's right. Thank you. All right.
Hit it.
I can't take no